All right. All right, guys. Just wanted to do a quick update about the market. Uh, yeah, I've been meaning to make a video. I said video last time, like I'm gonna do a longer video, but got lazy because it's not like this is a high priority on my list. But I just want to do a little quick video about the way the market's moving. Something's very well, not small, but interesting for some, for one to look at. Let's go ahead and save this drawing set as uh, current. And okay. All right. So, and something that really caught or has caught my eye before, as the way the market's moving right now, it's like I said before. My bias in this market is that we are in a bear market. I'm not gonna go over why and all that. It's gonna be another hour-long video. But I've said in some of my old videos why it's a bear market. Both fundamentally speaking, macro, you know, um, market internals, and the last step, which is technical, right? So everything is really saying that market is this is a bear market. Now, at least that's again my take on it. Now, this year has been really great. Everything that I've predicted has more or less come true. Even the ones that like have come true and but wasn't as strong. I made pretty good trades on them. So I can't really complain. I wish um, I had offers about like trading people's money. Now I wish like I had a fund. I had my fund right now. Because well, hallelujah, be maybe I'll become famous like I don't know, Stanley Druckenmiller or something like that. But anyway, kind of going back to the main reason for this video is that one of the aspects about bear market is that the violent move, right? And generally speaking, many times what happens is that whenever these moves happen, if you have a violent, and usually obviously it's the downside. I mean, they can like have rallies that can rip your head off like this, right? Like in the summer rally that I expected, which essentially ended up happening. It was a stronger rally than I expected, but it is what it is. Um, so what happens is that whenever market starts to really expand, they really expand, right? And it's the main expansion. It doesn't necessarily happen in the first step, right? The first act. It happens, and there's a certain point when the market just starts to slide away, right? And what happens is that it doesn't meet a lot of like consolidation areas, okay, a lot of compression areas. For example, you can see on the first legs down, in this market, that there was compression here, 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 here. There was a big compression here, like in May. Went down, compression down over here. Okay, this formed a base, but given how wide the market had been, it wasn't a really strong base. At least not long term. It was a again, this is what kind of clued us in or clued me in that this is probably going to be the start of a bear market rally and ended up being one. Um, and you can see that over here. Then it's on the daily, by the way, that this is again a base that's forming. A base meaning that there's quite a bit of market action at a certain like price level, right? So this base around here, about 4,300, or in my estimation, the 4,290 was an important level. So it really stuck slightly above 4290, so about 4300 to 4330 or so. Actually, let's see, it was about, yeah, what, 4300 was like where the main action was. Um, and so what was interesting about this portion is that the market didn't really, it didn't really consolidate, right? And this is very symptomatic of a bear market. And this also symptomatic of something else, that the market's ready to like slide hard. Like in this case, since again the bias is down, it's a bear market. At least that's my bias. The expectation would be the market to slide down hard. And this is something you can see that there's a level over here that 38, 87 or so. This is again the dailies, and there's a little bit of if you go back May and whatnot, you can see that levels was touched. There was a gap down. Now it's kind of far out, so that level it becomes less relevant the further out you go, right? However, right, there is this level is important, right? Temporarily, and looking back, in these areas back in May, how much again it's relevant now, who knows. I mean, it's somewhat relevant, but maybe not as much. um, but this 3800, you can clearly see this area is also coincide with this kind of like couple of tops over here, right, in June. Then again, pivot low over here in July, late July. And again, generally speaking, in that same zone, right? We're looking at zones. But the interesting thing here is that the market seems to right now just start to like accelerate. And as I've said before, September is a bad month usually, relatively speaking, right? Between September to um, really August, right? But September is really bad month. August to November, things happen. Bad things happen, generally speaking. September, October being, really bad. Not really bad, but generally bad, relatively speaking. Inside of that window. So basically, what this implies is that if the market takes out like this lows and these levels down here at about 37, what is it, 37 uh 20, but really about this level here, which is about 37.40 or so, this congestion zone, once it starts to hit that, and if it does break at 36.38, we might go down real fast. The same thing is true here. See how far I saw how fast we had this like a week long rally, right? Culminating at 41, what was that, 41.19 at the top, at the high on the 12th of September. But market crashed down, right? And I'm again not going to go over the reasons why, the fundamental reasons and all that kind of stuff, the macro data, so. But again, what's interesting is that these wild gyrations, and on the second leg of a bear market, these gyrations, the market really accelerates, right? They really trend and move really fast. And so since the market is not really like finding a consolidation zone like here, right? This area, even here at the top, given that at least my bias is bearish, estimation is that if it breaks this level at 38.91 again, the market's like looking like it's ready to make one of these moves down, like really fast, quick move down, very violent move. Now, is it guaranteed? No, right? Um, Again, it's a pretty fantastic year for me. Um, one of the top five, let's say. I've been trading like since 2003 or four. Um, both retail and also institutional accounts. But either way, my point being that over here, technically speaking, the market just looks like it's gonna do like another um, slide down. You can see it on the hourly, right? This is what actually clued me in on the hourly. See, not a whole lot of action here, right? Except like a few hours there. It's a day's worth. How fast it moved, not a whole lot of consolidation. Went down again. Now it's finding um, some amount of consolidation, but really still intraday, hourly wise, there's still a lot of movements. Um, you can see like there's a lot of like gyrations before start to move down. It's broken like the 38.90 before. Um, so the same thing, you can see these trends. Um, let me just look on the hourly, right? This one was maybe a little lighter. But look, tops. Look at the tops. They're more heavily traded. Top over here, not so heavily traded. Top over here, a little bit more heavily traded, but not like like over here, right? Or over here. Um, the move up has been like really fast from 38.95 to 41.18, right? With I think like in a week, like I said, we thought the daily it's like less than a week, yeah, less than a week, or just about a week. But yeah, that's basically what I was kind of trying to say. Kind of, a show. Over here, they did base around this 39.20. But again, the interesting part is that it hasn't really consolidated around that level. Instead of doing that, still the market is really gyrating. It's really violent. The spreads are really big intraday, which is another way of saying that the rate of change is too fast, too high, because intermediate people haven't come in and provided a floor, and so um, basically market tends to pull away. Again, the concern is that if it does start move down again on this second leg, we might see a really hard move down, maybe even harder than what we have seen, over here. If it's a true bear market, and it's in my opinion, major bear market, we should see at some point like a market that just tends to just go away, like just leave, like just get off, like fall off from the bed. Like, I mean, if you look at the 2020 when COVID, how the market just crashed. Although that's kind of like that's not a good example because it's a little too. Let's see. Let's look at a better example. Okay. Oh wait. See, like, okay, so you one leg down, two leg down. On the third leg, or you can say this is a 2.5 leg. See that, like, it just fell down. This is again what at some level, and usually it's like the second or third leg down. It's not the initial couple, one or two legs. Um, you should see some kind of move like that. And my concern is that the market is behaving kind of like that. You know, um, you look at the consolidation that happened. Okay, consolidation, right? Consolidation here, start to accelerate consolidation. It even the consolidation was like more like a rounded top pattern. It wasn't like really a at a certain level the market was testing, and then once it started to move down, it really moved down, and that's again my concern. I just wanted to kind of show that. Again, nothing's guaranteed. You should do your own research. All one bear market, right? This was a very innocent bear market, especially how long it was kind of um, it's kind of extended out, for quite a bit. For 2 years or so, 2.5 years or so. Actually, what? 2000, and really the low was in, yeah, 2.5 years. Well, actually 3 years technically. Um, by the way, I didn't get any sleep. I've been having hard time sleeping, so it's like I don't even know half the words I'm saying or the dates and the time frame. I'm from, probably not gonna be exactly accurate, but roundabout. But anyway, again, my point being that if you look at the second, third legs, that's when you see acceleration. Again, my concern is that maybe we might see something in the future. Again, not a guarantee. I'm not telling you to trade. This is not an advice. Um, it's always a good idea to hedge your bets, hedge your trades. Um, Even though this is my bias, I'm not putting all my trades in the same direction. I'm hedging my main trading, my trade delta with some kind of a way to offset, primarily using options, offset, um, positive, with some positive delta, right? And especially with something kind of like an option strategy where you give some like convexity, so where if it does move against you, if it moves against you really hard, you have some like leeway, because if you're for the options that you have further out, or it also depends on what kind of strategy that you are using. If there's a lot more volatility in the opposite direction of your trade, you might make back quite a bit of chunk of change from the loss of your main direction of the main direction of bias of your main trade. So that's it. I'll leave that be for now. Um, this is Niaz. Hope you good. Good luck with your trading, and hopefully next time we talk, and or we talk, I make my video. Yeah, probably I'll try to go more in depth about what's been happening, right? What caused all this kind of stuff. So, it should give you a heads up. Oh yeah. So one other thing that I totally forgot is you can see on the daily that this uh, um, man. See, I told you I'm like I lack. I haven't slept much. Uh, a trend line right at the bottom, right? Well, you have a trend line over here. All right. Yeah, to get my dog out of my room. Uh, it started whining. But anyway, so what we have here is kind of a pen and pattern forming, right? And basically, uh, it's not a perfect pen and pattern, because you should see some kind of touch, a few more touches, one more touch in here will make it a proper pen and pattern. But what's more important is that, again, like I said before, I'm not a technical analysis Nazi, and people basically use technical analysis and just like disabuse it and all that kind of stuff. What it tells you is the pricing dynamic, the pricing environment, right? The way the price action is working, right? It's more of that rather than like a perfect like this thing looks like a I don't know, like some super duper channel or regression this and something else that it's mumbo jumbo, right? You have to understand like what price represents. So price represents at this point, what it's telling is weak, right? It can't even finish this pattern. Um, Again, shows weakness, and in this case, it's multiple touches on the bottom line, which tells you that there's a lot more, momentum to the downside, a lot more strength to the downside, right? Um, so let's see where it goes. It might again revert back to the upside. It might form a proper pennant pattern. I'm not, again, always hedge your trades. Looks like right now though it's really breaking out right here, right? Um, so it's just something to keep an eye out on. If it breaks down, um, with our fundamental background situation, being what it is, like I said, I've said so some of previous videos. This is going to be one of those situation if it does break this line, we might be seeing quite a move downside. All right, so I guess for today I'll leave it at that. I mean, market, Jesus, what the fuck just happened? Yeah, I don't want to keep on doing this thing. So, yeah, I'll see you guys later. Good luck with your trading. And like I said, none of this is an advice. Just something that I'm looking out for in the market. Thank you and have a good day.